What's up? Hope you're good. This is me. So today we backtesting what period is the S&P 500. Okay, but that's not my cup of tea. But I think let's change it. Let me just exit the session. Let me backtest something that's quite familiar. So I'm a backtest. What's this? Let's backtest GBP USD, and then we'll also backtest gold. So let's start the GBP USD. Alright. So this backtesting that I'm trying to do is first of all, I'm gonna hop in the daily time frame. Of course, I can see we kind of like bullish. And then usually what I do is I could jump on the weekly. Right? Now you can see we're clearly in a downtrend. Now we're sort of like going in an uptrend. So from my method way, I take the first leg to the down leg. Means I'll take this leg, map it down like this. Now we've crossed over, we're on the bullish side. So for the confirmation, we'll be taking this line parallel it to the downside, which should be the first extreme here. Yeah, right about there, that's where price action would make sense. And this is kind of like the standard deviation, or like the offset, right? So let's forget about the offset right now and consider this channel. And then I'll then take an indicator. I'll take the moving average exponential. So exponential, moving average exponential. I'm trying to see something about this exponential movement. Can you see? So clearly we're in the buy trend now, buy side. So I'll be bearish and I'll be bullish, because now we've taken up buy side, that's there. We also have buy side, that's here. And has that been taken out as yet? No, buy side has not been taken there. So we might retrace deeper and go bullish further again. So from this current level setup, yeah, you can see we're in a downtrend, change the character and all that. So I'll say we're bullish, up, down, up, down, up, down. So these lows are supposed to hold. Let's find the charger. Alright, so from a weekly perspective, that's what we have. And let's see. There's a fair value gap in here that caused the change in character to the bullish side. This one, this fair value gap. This fair value gap right here. Right, so market could retrace, sweep out the lows in here, walk into the fair value gap, possibly enter this very bullish order block here, and then trace to the upside. So anyway, in between this looks like mitigation block, but that block right here could be a push to the upside. And yeah, check anytime we were at a bearish order block, price came back in and shot back up. So from this is the only reference. Here we retrace down, boom, was not respected, but price shot back up. So this bearish order block could hold. So I'll just put this one right here. There's another point of reference. This could hold. Right, and then what are we doing right now? Okay, so we said the market is indicating that we're bullish, right? So we have sell side below here, right? And this was the high, this was the low, and we took out buy side. Now we're reaching out further. So if I extend this line, I should look for entries that could accommodate us to push to the upside. So right there, that's where I need to mark off the lows, the weekly highs and lows. Right, so there's a low here, right, and there's another low here. And where's the weekly high? The weekly high is here, right there. Now, ICT says something about finding a range. We look at a bearish candlestick, look above it, look for the next bullish one. So I don't see a range here. I don't see it because the range was supposed to be this. But either way, we've been bullish. Got some price inefficiency in here, and then yeah, but I think let me try adjust my indicator so the length is on a 200. Now I need to be exponential. Okay, let's see. Alright, so from making it a 200 moving average, you can clearly see that when a sell-off position, a buy position, now we're actually selling short, so I should keep shorting the market in this region here. And what's above this region, we can see that we've got very order blocks. So we could be looking for a sell if we push it to the downside. Maybe 120 was too much. Put a 120 day moving average. In a 120 day moving average, then we can see, okay. So yeah, I was supposed to use the 200 day moving average. So in the daily time frame, let me adjust it to 200 day, and let's see where we're at. Alright, so in the daily time frame, we have crossed over. Now we're in a bullish phase. We're starting to trend to becoming a bullish because the moving average is above. So yeah, we're hoping to be going bullish. Map out key points. So with this low to the second low, which is right there, and clearly we now have a change in character to the downside. Map extreme, here's the extreme. I could map it like this because I feel like the upper side is more realistic. There we go. Right, then I can drag this one, put it right there, and I delete this one. Although this one could indicate us that we could go to the sunset, but we'd need to see a change in character, which means rejecting these lows, pushing to the downside. That could mean that we could enter on this fair value gap here for the downtrend, but hoping that this low will be respected, or possibly just feeding into these lows again. So that's what we have. So far I can say buried order block fed into. So this is the first time, because you see this move to the upside, it broke a high. First entry was going to be this one, but it wasn't enough, right, for the buy. So the second entry was this one, but wasn't enough because it didn't break these highs. So this was the first entry that was reasonable because it's the one that shot back and took up the highs. So this is a second entry. So I think based on that principality, I'll be bullish here in that region. My stop just below that. So let me see, let's go plus we have retraced back to this high that was broken when liquidity swept. Yeah, swept these areas. Now we are on this bearish fair value gap, this order block right here. And remember, I mapped the highs and the lows of the week. So these are the highs and the lows. And then right there you can see we create that fair value gap in it. So if the market retraces down in here, I'll be bullish. I'll go long in that region. I won't take a big loss. I'll just take how many pips is that? That's 15 pips. No, it can't be 15 pips. That's like 30 pips is, yeah. So I just take pips enough to cover the bottom of that. 73 pips. And what's my upside return? My upside return is this retracement down to where I think I'll be entered in the trade. If I'm entered here, my target is right there, so I'll put it just below. And if it does keep respecting going to the upside and it doesn't change in character and whatnot, I could take another less risky and another risk entry right below there to take my profit target somewhere there. Right. So let's see. So this is the first entry. It's a bit of a risk entry, so let me go into the 4-hour time frame. Right, so in the 4-hour time frame. So things I had the feeling of going short here since we crossed over, but since the 200-day moving average says that we are above, so I would like to be buying. But although in this whole region from this low to this high, we're in premium because 50% is here, right? So the market has not retraced back to 50%, so which means these buys are quite risky. I'd rather be selling into this fair value gap that's here, or buy to these levels where we're gonna swoop the buy side here, because we've already taken buy side that's here, the last buy side is right here. So either if we pull back, we could pull back just a little bit into 50% and then push to the upside, because we believe it's buy side here, but we're so close to it that I think we could just push buy side, because if it's going for sell side, the only reasonable sell side that's of this magnitude is this one, right? These ones are temporary, but it's this one and it's this one sell side here. This sell side, that's really interesting here. So I feel like the market is already close to here, so that we can just continue the buy side, take out the buy side that's there, and push the downside. So which is why I'm still bearish, plus no changing characters yet. So I'll continue for the buy side. So let's go into the 4-hour time frame, and let's see if this bearish fair value gap, this order block, will hold for first entry. So yeah, let's play it. Oh, I didn't put orders. Ah, shit, I got tagged in. I wanted to get in on it right there. Open position. This is the risk entry. So on the risk entry, I'm risking 0.35. No, that's wrong. And the risk entry, I'm opening, and I'm risking. What's the current balance? The current balance is $227. So usually what I do is I risk what? I risk, this is equivalent to having a daily loss of let me just pull up my calculator. So what I do is I risk 14% of the daily loss. So if I have a $220 account, multiply that by 0.07, 0.05. The daily loss is $11, and then I risk 14% of that, which is 0.57. So being conservative is actually risking 0.07. However, my point is that this account was a $250 account resembling a 5K account. It was resembling a 5K account, which means that multiplied by 0.05 would be 250, right? And of that amount, I was supposed to risk 14% per trade, which is 35. You see, so this I should be risking 14% of the current balance. A more conservative approach would be risking 0.07 of the whole 250, which should risk me like $14, 17. Yeah, exactly. So I'm still risking the current balance. So current balance, and what we're risking 7%, right? It's the risk one. It's a risky trade, so we will put less risk to the table, right? In place. And then this other trade is the one that I feel like it's less risky, and this is the one that I would open the position, and I would risk 14% on this one. Place. Right, and let's play this shit. Okay, we didn't get tagged in. There's no change in character, yeah. Oh, we did get tagged in. $14 up, 15. And that's our take profit. Our take profit is the risk to reward. Alright, so almost swooping in. Buy side coming back down. Okay, let's pause for a second. We sort of made the low, respected this low. Now we take this low to this low. Right? I feel like that's how the market is gonna move. And then from there, we control, map it out, boom, perfect. So if we break above this, we're in the buy side, and coming back to this, we could continue to go to the buy side. So I think let's take partials just above there. Since when we entered the trade, this was what, Friday, it's already Tuesday, we could have taken this partial there. Boom, taking partials, pause. So our bigger trade was not entered in, but it's okay, it was the least risk one. But yeah, this fair value gap held, and now we should focus on taking partials. should have taken partials, but right there, there's another entry right there. So since the market was respecting, I feel like if it could come back to that bullish order block right here, the 4-hour bullish order block right here, so I could put because I now know the trend is in my direction, put a trade right there, put my stop just below this low. It's 83 stop, that's a 40 pip stop, and maybe just bring it down a little, like there. And then now I can open a position and then risk 4%, 14% place, and then let's go. Okay, market didn't come back down, kept shooting up. So right there we could open another buy where we're anticipating to go higher. Like somewhere there. But the risk to reward is 1 to 2. Yeah, we could take it, open, but it'll be a less risk entry. So instead of risking the whole 14, we would risk 3.5% place trade. Alright, we'll play that shit. Tagged in. Okay, tagged out. That's another entry right here, but I know it's gonna fake us out, because what this entry is gonna do is gonna fake us out and come to this buy side right here. So it could hold, but I'll be more conservative and put an entry right there to target these lows. Now my target now, why this is a good trade, still we haven't taken out the highs. We have tapped into them, but we haven't taken out buy side, so because we'll sell orders resting there. So I'll project there. That's where I should take out my profits right there, just one tick below. And I'm gonna put more, now risk 14% place trade. Let's go. Boom, got tagged in. Let's see, are we gonna get tagged out? That's the question. No, we're not tagged out. Still in, not tagged out as yet. Boom, got tagged out. So it's sweeping the sell side that's resting there. And then so it's gonna feed into that old time order that we had here, this entry. Almost tapping into that entry that didn't get tapped in. Boom, and we tapped in. Right, so we're hoping this low would hold. So at this point, I can see I'm going all in, because now it's in my current trade, the initial trade setup. So I'll adjust this, put it there, put my stop below that, and target the highs. Now my profit target is going to be way higher than this now, because from the fib you can see that twice of that is going to project all the way up there. Right, so I'll take it out there, and then this entry, I'll put it right there, put my stop maybe just below that, since I'm trying to accommodate noise, and my entry is coming into this bearish order block right here, this bullish order block right here, which is being tapped into. So if that holds, then I'm going long again. And this one, now open a position, I'll also risk 14%, place trade, let's go. So I want to be scalping my way up. Any retracement I'm taking advantage of, because I know this buy side and this is the only sell side we have. So I know we're tapping into this favorable gap. We might take a retracement, but the retracement can only bring us back into this region right here. And we could target this high, boom, fade into it, and then I'm gonna take a buy right there. I'm gonna go long, tapped into that region, and we're gonna look at the buy side that's resting here. I mean this fair value gap that's here. So someone once told me that as long as your stop is not tight, you would always make money in this thing. So another entry for long is me jumping in here, put my stop just below this fair value gap right here, because that's the one that caused the push to the upside. And then I'll take my profits same way above those highs, and then open another position. Still risk 14%, although I'm opening many trades, but it's like I know these are like long-term trades. And let's go. Get tapped in. Okay, market pushes up. Wanna see a change in character right there. Push to the upside. Boom. Let's go. Wanna clear out this buy. Boom, we cleared them out. Let's go. Now wanna see push to take out these buy stops here. And then here we could also take a trade. Okay, check, this was the bearish order block that was here. Let's check. Push to the upside. Now we should really push to the upside, because market's now tapping into those bearish order blocks. Boom. Ish. You know, that's beautiful. That is beautiful, bruh. And I'll be honest, I was losing money in it, but look, my account was down to $153, but because I'm trusting the process and letting my stops run, so these trades were taken on 30 May, and they became successful. They played out perfectly by 14 June, so that's like May, June, that's like a whole month. So as long as you have that higher time frame perspective, which is this 1 to 4 that I have, this 1 to 4, take all your setups, your intraday trades, by targeting the discounts, because no way to be buying here. Take the discount, look for the discount. This was a fair value place, because we short the upside, we retrace down to 50, we retrace down to 50. So it's this leg up, down, right? This is the part where the market is going to look for, right? What I mean in this section is, from this first change in character, we do come take 50, and in this one we also do come into 50, right? So it's no longer valid. So where's the next point? The next point is this region, where from this low right here, the push to the high, this low to this high. Market did come back into 50%, right? But then after that, it didn't come back to 50% at this level, but it took out buy side that I was resting here. And then it didn't come back to 50, and then finally there it gave in, came back to 50. And it was also 50 of this low right here. This was the crucial low. So can you see we pushed into 50? There's a fair value gap. And what else is there? There's a bearish order block right there. You see this one. This one. Market feeds into it, booms, and buyers. So most of our orders are out. The only order that's left is this one. So let me delete these orders. These orders are out. These orders are out. The only order that's left is no, this one of them was supposed to stay. This is out. No. This is out. This is out. This is the only order that's staying, right? Because it's still supposed to hit TP at 49. And now watch how the market rallies now. Because our original take profit was supposed to aim at 2, right? Because to remember how I projected, I took the high to the low, projected, and then you realize this is where it's going to be twice that level, and I projected it lower. So I'm quite confident this will hold, and any retracement that could feed into this would possibly make sense. Now, another key thing to realize is this was the weekly high, right? And it got tapped into sell orders sold. We had to induce price, right? Because we had to take out all this sell side, right? And feed into this important fair value gap, right? And now this important fair value gap caused the push to the upside now. So let's go back in the daily and let's see. We had said we want to capitalize on taking buy side liquidity that's resting here. So this was the first high, second high, first attempt, we can take a short. Now we know that it failed to take our highs out here. Now we know that the retracement can come, push to the upside and take buy side. Now imagine if you had buy orders resting above here. Do you think the market was going to reverse instantaneously, or it would actually want to feed and close in this liquidity void? Right? It would want to feed in this, close in this liquidity void, because that's where there's a fair value gap, right? So we could see market potentially coming, feeding into this liquidity void, and finally resting here where we had this bearish order block. Right there. So the market could rest there and then continue to the downside. And another thing that could help us anticipate, we're still bullish in the moving average, right? So anything above it. So where are the other points where we could be looking for buys? We could be looking for buys in this mitigation block. Could look for buy setups there as long as it qualifies 50%. And in this other very bullish order block as well, we could look for buys. So let's jump back to the 4-hour and let's see it pan out. Now this high could be retraced back, boom, short. So this region right here, where the whole entry could be in this region, yeah, that's an important, yes, okay, just hold on guys. Okay, guys, I'm back. So sorry about that. Yeah. So what was I saying? I was saying that let's look at this bullish order block. So we're still in the perspective that we are bullish until the market tells us we're not bullish anymore, right? And you can clearly see from this push to the upside, we have made a new high and there's a new low, right? But in all this push to the upside, we're going back 50%. Now this is the part where we have not gone back 50%. So I'm saying from this push we came back 50, took orders, came back 50, took orders from this low, right? We came back 50, notched it, right? So I can say that's valid. But then from here now from this one to the part where we broke the highs, we haven't come back 50, right? And then now we are, so 50 could be happening in this favorable gap. So we could look for buys again in the, remember we've already taken setups that we took to the buy side, and we're up 539, although we haven't closed in 107 that we cut in floating, because we're gonna close it up there. So let's play and hopefully this retracement is the one that could take us up there. So boom, 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 coming back down, looking at it. So now let's push this further up. You can see, right, 50% would definitely confirm in there. So I'll go long, take another position up there, put my stop. How many pips of stop is that? Is that like 100 pip stop? Okay, I'm not being conservative about the stop loss right now. I'm just being conservative about how much I'm risking. And the target is going to be this. From this high to this low. Yeah, you see my target could be somewhere, yeah. I'll put it just a nudge lower. So that's my target. Let me open this position. And I also risk, since it's a bit risky and we're now in the upper trend, place and let it play out. Let's see. Almost got nudged in. Okay, we went tagged in. Okay, I think we got tagged in. No, we didn't get tagged in. Got tagged in, almost went for a stop. I think it's gonna run us out. Yeah, stopped us out. But I'd wanna retry that entry. So me retrying that entry means I'm taking this. Taking this. Now you can see we've got a proper change in character, push the upside, left a fair value gap right there. So I'm going to take the entry in that fair value gap, put my stop below that, and this will be more of a risk entry. And I'll risk 14%. Can't place the trade. I think I got tagged in. Let's see. Yes, buy side, yeah. We've left all these buy sides. Boom, boom, boom. Wanna see it here, take profit. Boom, take profit achieved. Bam. All of them. Check, guys. Ain't that amazing, bro? I mean, like, call me guessing or whatever, but I mean, like, this is ICT stuff, bro, and you only learn when you learn to appreciate that one, your stop doesn't have to be that huge, right? Now I could refine these entries in a lower time frame, right? Fair and fine, but can you see just how I had faith in this fair value gap right here? you see, and there's another bullish engulfing pattern here, which could also lead me to take a trade right there when I see it, and I'm like, okay, it's about to happen. Guys, it's very exciting, especially when you start seeing stuff for what it really is. Like, there's less emotions to it. Right, and a big stop loss will actually encourage your trade setups to work now. Imagine, I've been trading this since 26th of May. Today is the 12th of July, and my account started with a little over $226, and now it's up 883, right? So how much of a return is that? Let's bring back the calculator. So it's 883 divided by 226, right? That's 3.9% return. 39x return times 100% return. That's 390% return, right? So if this was a prop firm account, right, and if I was gonna go get payouts and all that, I would have been returned the amount. So it was gonna be 883 minus the 226 I had made, divide that, get multiplied my profit target of 80%. Boom, or they've made $526. Right? In a space of how long a space is this? June, the 5 days of May, the whole of June, and part of July. So having a higher time frame bias would always help me to realize that, okay, I should look for a buy in here. Now let's refine this buy. We said the buy was supposed to last from this high to this high, 50%. Boom. We touched 50% the first time, shot back up, didn't take out the highs here and retrace. So that would mean it's a turtle soup, right? It's a turtle soup. And we are gonna shoot and check how this small bullish order block was respected. That was the last one that was respected. And it also like tried to feed into this major one right here. So don't overlook the major ones, because you see how it almost tapped into the major bullish order block right there and fed in just like that. So yeah, guys, I hope we're getting somewhere. These are nice results. So what was this? This was a bearish order block, right? This was a fair value gap, and we could wanna see a change in character in it, so that we can push to the downside. And downside is what? This sell side here, sell side here. So yeah, we'll trade this another day, or should I just continue and find out? Let's see. Let's try to project this thing. Alright, so let's try to project this thing, but we're still bullish though. You see, we're still above the moving average, so I'll be still bullish. Let me check the daily. You check daily, we're still bullish, and we're penetrating into that fair value, that bearish order block. So if the bearish order block is gonna hold, because we've taken our sell side, sell side, sell side, now the sell side resting above here, 1, 2, 3, 4 regions of sell side, right? And we still have sell side above all that. So I'm not saying we can, but if it's the first time tapping into it, we might have a retrace, right? And our retrace might feed into this bearish order block right here. So what we're gonna do is we wanna see a change in character in there. So move into a smaller time frame, the daily. So we're saying all this price action should come back and feed into the 4-hour favor mitigation. What's this? Bullish order block. And clearly in the daily time frame, it was this one. It could be this small one, but it was the bigger one, which is like this one. So I'm saying this one could be the one that we might feed back into as a retracement and push to the upside, right? So if we're gonna have some rejection, we might go short somewhere in here. We won't risk that much because there's no point at all. Just risk there, push back into this, and hopefully, so our risk to reward is 1 to 2. Not bad, almost a 1 to 3, but then when we jump into the 4 time frame, we want to see a change in character in the upper limits there, because we're slowly entering into premium. Now this is where we could try to project price flow. So if the charts just finish mapping out so that we can see where the high and the low is. So this is definitely the low. Where do we pick our first leg? Okay, we have one first leg that showed up. The first retracement is here. Shot back up, shot back up. So this is not going to be a clear one. So I'd say this is one push to the upside because it hadn't taken out buy side. Where's buy side? Buy side is here, right? So which leg took out buy side? The leg which took out buy side is this leg. So let me delete some of these lines. The leg which took out buy side is this one, this leg. So this is the leg that's going to count instead of mapping from this to this. That'll be biased, right? So the actually true leg is actually going to be the leg that took out buy side, because taking out buy side is what was important. So it's this one to the first retracement after the breakout, which is this one, and then I extend it right. I extend it like that. Let's further extend it. And so that's how the market pause that shit. Hey, this how the market finna be moving. And this was the extreme. So clearly we've broken out. And if we do look to the right, you realize there's so much buy side that's resting above there, right? Because it's so close to each other. Let's go back in the daily. Right. Can you see? Let me put a line. Where's the line? Right. So we have buy side resting there. We have also buy side resting here. So we're gonna trigger so much buy side, which is why maybe the market won't stop, because buy side resting here, buy side here, and buy side here. And after we conquer that buy side, where's the other buy side? The buy side will be here. The next buy side will be there. Right, now let's go back. You see? So the next buy side will be there. So this one is less achievable, but these ones could easily be penetrated. So let's just observe. So clearly I would have lost this trade again, and which was not a good move, because you've seen that there's no reason to try to stop a train. Just rather go with the market. Go with what the market's doing. So what the market is trying to do here is to signal me that right now I have a fair value gap that I've broken into right here, and I can use that to tap into a buy to the buy side. And this is why I didn't put this like live on the open position here. So let's just play. We're carefully playing. We're waiting for a retracement so that we can sync with the market. And a touch to the trend line is also a good place to buy. Boom, right there. So now let's look at this deeper, guys. Yes, we have a fair value gap in here, right? And we are touching the trend line. So this is a good entry, and we could put our stop just below the close of this candle. But we also know we've got a fair value gap in here, and let's also map a Fibonacci from this low, from this low to this low, from this low to that high. Where is 50%? This is not 50, so this is premium, right? We don't want to buy premium, we want to buy discount. So discount is buying in here. So we would rather wait for the market to come back into the channel, hit this trend line and buy. So we would want to put a long position right there, put our stops below this bullish engulfing. And where's our profit target? Our profit target will be the retracement, which is the retracement from there to where our entry is going to be. From our retracement to there. And what are we targeting? We're going to target this high, buy side that's resting there. So right there is going to be a good entry to target for buy side. Alright, so that's what we have. Then we can open a position here, risk 14. Damn, let's go. So we're targeting $220. So let's play this. Market almost tapped us in. Let's pause. Okay, it didn't tap us in, didn't feed us in right directly, but tapped into the fair value gap because it's the first touch, second touch, and these must go higher, bro. Like they must go higher. So let's just push our entry. Right, some of you might be wondering why I'm saying it must go higher. It must go higher because if we look at this fair value gap right here, how many entries? Okay, let's look at this one, this primal fair value gap right here, where this fair value gap that was induced here, and this the second entry was here. We pushed higher, right? But we didn't close above these highs. And then we had this entry, but this was our first entry because you wait for this to happen, then your first entry is here, and then it pushes to the upside, so it was respected, right? And we pushed further high, but we need to have a second entry. So the second entry was this one. Boom, that caused a high, right? So minimum of like 2 entries, but 3 is good. So now if you look at this fair value gap that was created here as well, this was the first thing that showed us, okay, this is a fair value gap, right? But where's our first entry? Our first entry, we didn't even get a chance because it didn't retrace back lower to feed into this fair value gap to rebook price so that we can push to the high side. So then instead, it pushed higher. So the market has been overbought, right? Overbought, so it needs to discount first. So as the market discounts, this tap in right here was the first entry. Boom, first entry. You see? Which is why it got rejected, right? But it will only count as the first entry if it breaks above these highs, just as this one did, right? This first one caused a push to the upside and boom, valid. That was the first entry. So we could expect 3 entries before we push the upside, and either one of them could come back low and induce us in. So I'll keep my low there. Boom, got tagged in. You see? Now my stop is right there, and I'm expecting if this thing is gonna hold, it's gonna take out buy side that's resting there, and also gonna take out buy side that's resting there. And my stop is somewhat valid, but I'll just put it a bit lower than these very shorter blocks that are resting there. Now anything that's coming further down, especially when it nudges that entry there, I'll take it. Okay, boom, that was an L, but it's okay. Let's check. So what's going wrong here? Let's try to reanalyze this. We short out of the trend line. Okay, and let's try to see where we could potentially go. So fed back into 50, took out this high. When you took out this high, did it come back to 50? No, it didn't. none of these came back to 50. Then we are here. So where's 50%? 50% is in this level right here. So I'd rather take my entry, put it there, or rather put it in this fair value gap right here, and put my stop just below fair value gap and target the high. So if we are gonna retrace back, boom, somewhere there to capture the highs that are there. Let's play this shit. Oh, sorry, I have to open the position. Risk 14. Boom, let's go. Place the trade. Almost got nudged in. Let's see. Tagged in. Let's see where I get tagged out. Pushing to the upside. Let's pause. So with the downtrend, with a clear trend line that was coming down here. I'll say it was this. Either way, with some sort of pattern that was happening here, right? And we got taken out. Now we have left a bullish order block right here. I mean a fair value gap and a bullish order block just below that. So I would take in another entry to go long. And when I have a fair value gap, I mean a bullish order block right there. But I'll tap into this one since it might want to retrace into this one. Take my stops, tighten my stop a little bit, and still target the buy side that's here. Yeah. So I'll take these ones to target these pots. And then this is gonna have more reward since it's got a smaller lot, which is why there's 324 here. Place the trade. Let's see if I'll get tagged in. Boom, got tagged in, tagged out. And can you see I'm losing $70, right? But I was supposed to earn more than that. So okay, I think this is a turtle soup. So I would still put my entry right in there, targeting this fair value gap in here, and my stops lower than that. So let's hopefully hope it will work out. And I know the push to the upside is going to be way more aggressive because now can you see this push to the downside? Target is there. So push my target right there. But on another level, right, I could have been going short because that's what I wanted after we retraced into this thing. So I'll have to wait for a push to the downside. And can you see all these were entries, good entries. ICT talks about these entries that happen. You see on the left where you're like, okay, there's an entry there. And you see how that entry was a valid entry this whole time. The opposite. But it's cool. We're still looking for our buy to the outside. So this could be a big trade. Did I open it? Place. Let's play it out. Tagged in. Let's forward it. Let's see if it won't make a lower low. Okay, almost tagging me out. Tagged me out in both trades. Okay, now shot back down to 597. Yeah. So I think let's take the L day. Let's take the L. So I should have realize that okay, this bearish order block was supposed to hold, right? But we still have this low. From this high, we discounted back into this low. So yeah, I should have considered maybe identifying, okay, yeah, so I see my mistake, right? My mistake is, although I was trying to buy in these ends, right? But it's hard to realize sometimes quickly that, like in this case, like this is now 0 and that's 50. So it's kind of realizing that this was premium. Alright, this is discounts. Yeah, that was the important part, maybe. So realize that above here is premium, now this is discount. Right? And if it's like that, and we have a bearish order block that was sort of pushed out but then respected, right? Now we should realize we want to be selling anyway in the premium side, which means this fair value gap, boom. And it hasn't been happening since. It's been up. Now we have a proper change in character, because this high and this low was broken aggressively. So there's a change in character right there. So I should have shorted, yeah. And I should have realized that I could have taken this first shot at the block after this bearish. This first one, we didn't get a chance to retrace, but the retrace came in deeper. So this was the first sell I could have taken. I've taken another sell right there. Boom. Shoot to the downside. And then, yeah, I could have taken this other sell right here. And check again, we have this bearish fair value gap, and we have one entry. Didn't get a chance to re-enter. Where's the first chance to re-enter? First chance was right there. So I could have taken another sell right there. So think about it like that, bro. Think about it like that and work on it. But otherwise, thank you guys for tuning in the stream. Hope you enjoy, and see you when I see you. Please do subscribe to your boys channel. Right now, we're the pits. Probably got nothing right now. This is ICT's channel. But subscribe to your boys channel. Your boys channel is Dubex Industry. And yeah, my computer is slowing up. Okay, I still so it's okay, guys. Either way, thank you guys for tuning in, and hopefully one day, guys. I hope to get funded, and I'll do another video after this stream, because I'm only streaming my trades, so that I practice more and I'm also uploading more. But then I'm come and take the high stakes 5K account, jump to 20K once I get funded, jump to 60K, jump to 100, and hopefully take maximum 600K funding with these guys. Yeah, and that's it, guys. Otherwise, cheer, guys. Happy trading.